Hello everybody and welcome to Green Star Trading with me, Tom. All views, opinions and ideas expressed in this video are my own and do not constitute financial or trading advice in any way. Right, we're just going to spend a few minutes now looking at gold and silver, doing a quick update, as I'm pretty happy with my primary count and my alternate count at the moment. I have one other idea to throw into the works, but it basically puts us in the same place. It just breaks down all of this, corrective structure differently. So if we just look at our primary count for a minute, go straight into our Elliott wave count here. This is the idea that we've just been in a triangle. A, B, C, D, E, 5 waves up into a 1, coming back in a 2, probably going to come back and test this downward sloping structure here, and then carry on in a 3. Bullish invalidation point in this case is here at 1753 spot 10. Okay, 1 to 1, if we were to take it in linear scale here, and assuming that's the A complete and that's the B complete, that puts us at 1818, which, as you can see, is going to do a pretty nice job of testing that downward slope. That could be the perfect opportunity to bounce on our way into a 3. Okay, I think that coincides roughly with somewhere between the 78.6 and the 89% retracement of wave 1. The 78.6, if we came down to the line here, we could do multiple things at once. We could hit a fib retracement level, hit previous resistance, becoming support, and then bounce. And that level is like 1820. So it's 1818, 1820. It's in that region. That would be a perfectly ordinary thing to do. Now, I just want to, before we move on to the alternate bearish count, I just want to move on to a new idea, which is it's basically the same but subtly different. I recently did a Patreon exclusive for XRP last week, which I posted up on the Patreon and out on the Discord, because I came across a combination count that I haven't seen in a while, and it's just got me looking at gold differently after seeing something similar in XRP. So I wanted to consider this as an idea. Now, what this is, now I'm perfectly happy to label this first section as a double zigzag. This here is a zigzag, this is an X wave, and then this is a zigzag. Okay. We can do it either as an ABC, but I find it more difficult to get 535 and 333. So WXY ABC, whatever. It's definitely, I can't find 5 in here. It doesn't matter how I try to break it down, I just can't get it to work. So one idea I'm looking at is, what if this is a zigzag or double zigzag, then we get an X wave, and then we get a triangle. So we've got a typical combination. You can have your zigzag, your double zigzags, your triple zigzags. You can have your double 3 and triple 3s, which are flat pattern side by side, and then you've got your combinations: zigzag, flat, zigzag, triangle. Flat, triangle, flat, zigzag, so on and so forth. And this is a zigzag into a triangle. This completes the E wave a little bit later. Instead of here, it completes it here. And what that allows us to do, instead of having to try and botch a bit of a dodgy diagonal into here, we can just get a pure impulse that zips straight up into a 1. Right, nice and fast and clean, obviously an impulsive wave. And then we're going to get a 3 wave move back. Now, pretty much the same gig. Come back and test this downward slope, maybe test the point of control, right? Get in below this, get a few people short, trap some liquidity down here, right? And then off we go. Now what this does is put us in a slightly different position where our bullish invalidation point is slightly higher than in our previous count. So it does adjust something slightly. It takes this should be 0.36. Right, it adjusts the bullish invalidation point slightly to a higher location. So we're going to lock that in there. Lock this in here as well, and then we're going to put these together into this combination count. So this might become my primary. I'm thinking I prefer the idea of 2 separate corrective structures as opposed to one big triangle, because if we take the, you've got the argument that that first AB was a 61.8%, right? That's a pretty nice retracement for a triangle. And then we get 78.6 and 78.6 as we saw. I'm not sure if I've shown you that prior. Let me just show you what I mean. So this initial move down is a 61.8%. So that feels like that's quite a nice corrective X wave, a little connector there. But it could be retracement of a B wave, A, B, C, D, E in our initial count. It's more than 50%, which is nice. and then it's subsequently 78.6, and if we measure again, we get another 78.6, 2 in a row, right, as we step down the side of this triangle. So 61.8, 78.6, 78.6. So we can either look at it as B, so A, B, C, D, so the B and the D wave here. But if we look at it as the X wave here, we get the A with a 78.6% retracement in the B, then we get 78.6% retracement in the D. Two identical retracements. Just find it curious. Now, if we look at it the other way around, so like we get a golden zone retracement here in our C from our A, right? Nice contracting structure, and for our E we get another 78.6 ish. It's in that region. It's not quite there. It's between the 61.8 and the 78.6. So there's some nice symmetry going on if we count this as a single structure. It's a nice looking triangle, whereas this is slightly less nice looking, right? So maybe it's just a visual preference I've got here, breaking this into two separate structures, but I like it. So if that's the case, we're probably going to backtest that structure, come down in a 2. We're coming back on the 61.8 at the moment, but the 89 is down here at the point of control, so it could be quite a deep wave 2 retracement. Having come back to the previous highs and gotten rejected here, a deeper 2 in this scenario would make some sense, especially if we're backtesting some kind of structural support. So the invalidation point here is 1780. Let's just save the chart now. So there's your bullish counts, and like I said, I just need a little bit more time to consider this, but I'm quite liking this idea that it's a combination. Like I said, after seeing what I saw in XRP and that exclusive I put out where I wanted some feedback from my patrons, I saw a very similar possibility here in gold. Obviously different place in the chart, very different, but either way it's there. Okay, you could argue for it. I think this would be an extended A into a rather short C, but still not truncated. And then this is a more typical, that could be WXY in a D wave perhaps, right? Let's just label it ABC, keep things simple. Okay, so there are your bullish counts for gold. I think I'm still going to call this my primary for the meantime. I am bullish. There is a bearish count, but the bearish count is only so bearish. It's still part of a larger bullish structure. The one count I can't really get on with at the moment, and I have considered it, is the idea that we've had a 1 and an insanely deep retracement in a 2. Probability wise, after going through the 61.8, the 50, and then the 61.8 retracement, coming to 99 point something, it's pretty uncommon to see such a deep 2. And when there's no clear impulse in the 1 anyway, and it's a force fit diagonal in my mind at best, then it's more likely to be either an initial move out of a correction or a B wave, right? Which is what my alternate is, that we've got some kind of swing B before coming lower in a regular flat. So let's consider that now. So let's bring up our flat pattern, and this is pretty self-explanatory, right? So similar to the idea of this being a separate structure with our combination, it is the connective wave of another separate structure, which is another zigzag. So we get a zigzag here, we get a zigzag here, right? 5, triangle 3. I know it's 5 ways, but we say 5, 3, 5 because it's a zigzag. 1, 2, 3, 4, 5 here in the C. This gives us our B at over 90% retracement, so it does everything it needs to do to be counted as a flat. And now this is going to be 1, 2, 3, 4, 5 down in a C. Now, obviously, I haven't adjusted this in a while, so I would expect it to go lower because we'd be expecting a regular flat. Okay, we did not breach the high, whereas that would be a running flat or an expanded flat. So another lower low. Now, it won't be by much, because if we do a 1-to-1, it's basically going to be like a pure regular flat, which is point to point, slightly beyond. and we'll come down and do 5 waves, and we've just got this big 3 wave structure, and then off we go. Now it could come to deeper targets, being a regular flat. It could come to the 123.6, 131.8, you know, and come down deeper. It could come to the 1618. That would be quite rare though. If we were going to have such a volatile move, I would have expected the B wave to expand and then get a really mighty wave C come down, but we'll have to wait and see. So that's going to be my alternate. Cut-off points are the E wave of the triangle for this count, and the C wave of this triangle if we're looking at the alternate, the combination count. We've got those 2 invalidation points labelled anyway, one there at 1780 and one there at 1753. They break down and this starts to look more like a 5-wave structure than a 3-wave structure, then I'm going to start favouring the alternate, which is that this is a flat. Now what clues are we going to get? Well, by the time we go through 1-to-1 of a zigzag, which is not, doesn't have to be the case, it just, they tend towards parity, they don't have to be at parity. Then by the time you go through that and start to suspect that you're in a wave 3, if we accelerate and we start to get more downward momentum, okay, we're already heading into oversold though, so I'm not sure how much more downward momentum we can get before we find support. Okay, but if we were to get some really aggressive selling down here and go past that 1-to-1, then maybe you could look into this being 1, 2, 3. But by the time you come to a wave 3 target, you're going to already invalidate the bullish count anyway. So whatever your conviction is, for me at the moment, I prefer the idea of looking at this as a bullish count. Now we've done 3 up here and we've completed 4 here, and we've had a zigzag into a triangle. I am leaning more into this now than just the basic triangle, although they tend to put us in the same place anyway. So anyway, that's gold. Got your invalidation targets. I think we're bullish. I think we're up in a, coming back in a wave 2, and we will make new highs. If we break down and take out those invalidation points, I think we're looking at new lows below the March 21 low, but probably not by much, and then we can complete a wave 4 as a regular flat before heading higher. So that's gold. Right. Before we move on, let's just have a quick look at where our moving averages are on the daily time frame. So as you can see, this was very much triangular behavior, coiling moving averages that all get caught in a contracting pattern. So maybe a move back to the 250 will coincide with a back test of trend. Ooh, there we go, a back test of trend, and those fib targets somewhere, maybe find support around the 250. Just looking for some more basic support here. And our indicators, like I've already said, you know, first strong move up into overbought conditions, the strongest move we've had on the RSI since the peak back in July 2020. Same in MACD, strongest momentum we've had breaking that connective triangle of either combination or completion triangle. The strongest move we've had also since July 2020. A lot of this points, I feel, to resumption of trend. We've spent time correcting, we've had a stronger move off. We're coming back into oversold now though, but we're a long way off price wise from where we've been. So I think push down into oversold, get this C leg complete, and we can probably get moving higher at that point. So that is now gold. Let's come over and have a look at silver. So with silver, what have we got? Well, bullish count, similar setup to what we're looking at gold, but without that triangle connector. Essentially, we've got a zigzag into a W here, okay, and then we've got another zigzag into a Y. It's not the prettiest, admittedly. I've tried it. You could maybe get it to work as a double zigzag, but the issue I have with it finishing as a clear 5-wave structure here, okay, which makes it a little more difficult, and we have a diagonal here in this, so we'd either be saying A, B, C, right, W, X, and then there should be another zigzag, but there wasn't. There was this 5-wave structure instead. So what I've gone for is 1, 2, 3, 4, 5, a diagonal 1 inside of a larger diagonal in an A, 3 waves into a B, and then 5 down here into the C of a Y for our 2, and then from there zigzag into 1, zigzag into 2, zigzag into 3, sharp fast zigzag into 4, zigzag into 5 for a contracting leading diagonal, and then we're looking for 3 waves back in a 2. Similar situation to what we've got in gold, just without that same triangular structure. So what can we look for? Well, we're looking for around the golden zone at the moment. We could have resolved this. Maybe we've got to come a little deeper. We're into oversold territory now in silver, so perhaps we've come further enough, but we'll see. You don't want to buy a falling knife. You don't want to catch a falling knife. So what we want to see is for this to complete, turn around and get 5 little waves out of here and a 3 wave move back. Okay, move back up into neutral territory, or preferably into oversold territory. A nice strong move, same with a nice strong move on the MACD would be good as well. And then I think we can be more bullish. I think this is just the initial first move, 1 and 2. So invalidation point, let's pop that down here, shall we? There's a nice simple strict low we've got, unlike in gold, because we've got that contracting pattern which gave us the E wave of a triangle, which gave us a slightly, you know, higher completion for our invalidation point. Down here it's not a problem, so lock those in place. Okay, and that's how I see silver at the moment. It's been much more convoluted and ugly than in gold, and yeah, so that's the bullish count. Cycle wave. Just have a quick look at this. I never brought up the pitchfork for gold, did I? Well, we'll do that in a minute. One thing I notice is, having come back in this structure where we had some resistance around this 38.2 level here, some support around this 61.8 level, came through it, back, came through it, back, came through it, back to the 50, and now we've gone back to the 50 again, and now back to the 61.8. So maybe we're still going to get another move lower, some more corrective behaviour like we saw with these rising lows, and then continue this move. We'll see. I just find it an interesting piece of geometry. The 61.8 on several of these major pitchforks is playing a strong role across multiple markets at the moment, including Bitcoin. I think I've shown you that as well previously. But let's get on with the bear count. Bear count. Here's another pitchfork, which is very assumptive of me, admittedly. I'm working on the idea. Okay, does this fit better in log or linear? I'm trying to get my head around that. Fits pretty well in either. This idea is that we're not done and we've got a bigger move to go. So this idea suggests that we've had a W here, right, an X wave connector here. We've then got another zigzag here, and then another X wave connector here, and then we've got another zigzag to come in a W, X, Y, X, Z. Okay, so we can see here how this rising to 38.2 level has been providing support. We've now broken that, so I think we would probably seek out the 61.8, come back to the 50, then seek out the bottom of the pitchfork. Okay, come down much deeper potentially. So if we break the invalidation point in the bullish count at 21.432, and once again we see this accelerate beyond 1-to-1 parity, and we pick up momentum to the downside, we're already almost at 1-to-1. Okay, so that could be ABC in itself. So just something to keep an eye on. But I think with how oversold we're already getting, how much deeper can we push down? I mean, it's always possible. You can stay oversold for a long time, right? You can stay overbought for a long time, but we're already in there and we're heading towards support level, so we'll see what happens, but I'm still leaning on the side of the bulls for the moment. If things change, I will change my opinion, and I have a bearish count for that exact reason. So favouring the bullish count, that silver has completed its correction in line with gold, and we've had the initial move up and out, breaking that bearish trend. Okay, and we will now continue higher once we find that local low. If we look at our moving averages here in silver, we can see how we came back to the 250, the green line, tested it for support, tested it for resistance, just broke through it, came back, resistance, come back through it, support, come back through it, failed support here. So that could be interpreted a little bearishly, that we've got way above the 250 but it hasn't held. So we'll have to wait and see how that develops. On the weekly, how are we looking? We've got the 250 coming up to meet us on the weekly. Let's just take on, let's just do that mess first. So look at it on the weekly time frame. Weekly time frame, we've just broken back through the 60 exponential moving average on the weekly, having brought the 10 and the 20 through it, but failing to go any higher yet. We could turn around quickly though. Yeah, having gotten these moving averages through here, and we're already oversold, we could turn around and start heading higher and get everything moving up. With the 250 weekly still coming up behind us. If we do break down from here, there's potential support, right? So coming up on the long term, we'll have to wait and see. But I'm going to stick with the more bullish count for the meantime. And we've just had bearish crossover here on the MACD on the weekly. How are we looking on the daily? Like I said, into oversold territory. Yeah, silver's definitely been a lot trickier than gold in terms of trying to make sense of its correction, but this is the best I've been able to make of it. So that's the best I got for you guys. So bullish in the meantime, waiting to see this 3-wave pullback off of this diagonal complete. Similar with gold, waiting to see this 3-wave pullback complete off of this initial impulse up almost to new highs. And that's it, guys. Alright, thank you very much for joining me on this technical analysis of gold and silver. If you're new to the channel and you like what you've seen, please subscribe. Feel free to leave us a comment in the comment section below. Remember to smash the like button as well. And as always, huge thank you to my Patreon subscribers. Your support is greatly appreciated. And if you're interested in becoming a Green Star Trading Patreon and getting access to the Discord, plus a whole bunch of other benefits, including weekly exclusives and live streams and the rest of it, and a whole bunch of Elliott Wave educational materials, and head on over to the Green Star Trading Patreon page, have a read of the different tiers. If anything interests you, consider signing up. I would argue at this point of the month, maybe you should leave it to the start of next month though, so you get a full month's value out of it. But either way, take care guys, I'll be back with you soon. All the best, bye bye.